Hey guys, hopefully everyone is doing well. Today's target is to solve question number 1. The chapter which we are related with is accounting ratios. As we have already discussed several formulas in lecture and you are already shared with the formulas, so it is better to see the formulas first. A good handout or a good grip upon accounting ratios formulas would definitely be very helpful for you to solve these questions. So it is request, just go and read out the formulas in an appropriate manner. So here we have our question where there are 2 years, year 1 and year 2. Year 1 have its own assets and liabilities, same for year 2. And what we are required, it is written over here, to comment on the solvency position concerned with the accounting ratios. Actually, in this question, it has already been described that what ratios we are needed to calculate. Here, current ratio, quick ratio, debt equity ratio, debtor collection period, and proprietary ratio is asked to calculate. So what we will do, we will simply pick these headings from here and just going to solve the question. So first requirement, what we are looking for is current ratio. Look at here, it has been given over here, and we do know the formula of current ratio is current assets, and they are going to be divided by current liabilities. Let's put the sign current liabilities. So we have got our formula. Now we will be looking forward what assets are current. As you can see, you have 10,000 as your stock, current asset. Yes. Then you have debtors, 30,000. Yes. These are current asset. Prepaid. Yes. 2,000 current asset. Then we have cash in hand. Yes, these are current assets. So there are four current assets we came to know: 10, 32 and 20, 10, 32 and 20. We have posted over here. Let's put the bottom line over here. And now we are needed to see current liabilities. Beside these assets, current liabilities are mentioned at lower part. Creditors, yes, creditors are current liabilities, 25,000. And then we have bank overdraft, yes, but amount is not mentioned over here, so you can leave it. Acceptances, bill payable. Other name of acceptances is bill payable, and yes, they are also current liabilities. So we have mentioned how many current assets and how many current liabilities. In this way, we are now open to calculate values. We'll put over here, and now just putting these values upon calculator, we will write over here. So sum of all current assets we have calculated, and sum of all liabilities we have calculated, and ultimately here we will calculate the answer. How? 62,000 divided by 40,000. This way we have got our first answer, that is 1.55, and look at here, current ratio 1.55. First we will solve first year and then we will see the second year later on. First ratio has been calculated, second ratio we are now going to calculate, and second ratio is required quick ratio. Let's write down the heading first, quick ratio, and it would be calculated by almost similar formula, except these current asset we will change it. Instead of current asset we will write quick assets. There are two ways to calculate quick assets. Here I can write either just take current asset and skip stock or prepaid. And second way, if you want to calculate your quick asset, you can take current assets and then subtract stock and subtract prepaid. This is second way to calculate your quick assets. But here it's very simple. As you can see, the value of stock is 10,000, value of prepaid 2,000. So what we will do, we will take all these amounts as it is, and value of stock 10,000. We are going to delete this 10,000. Secondly, prepaid amount is 2,000 and we are going to delete this amount as well. Look at this, it had become quick asset. How? From current asset, these were current assets. 10,000 and 2,000 were stocks, we have subtracted and we have got our quick assets. While both formulas are having current liabilities, they would be similar, and here we will calculate sum of these amounts. We'll put these upon calculator. First, quick assets, we have got the sum, and then current liabilities sum we have got, and now we are going to put it upon calculator. So 50,000 divided by 40,000, we have got 1.25, and you can see quick ratio, its answer is mentioned over here, 1.25, 1.25. These are misprinted answers, you can leave it out. So current quick ratio 1.25, 1.25. So guys, in this way two formulas are completed. Now we will see the third formula which is asked, and the third formula is debt equity ratio. So here we do have three formulas for debt equity, and we don't know which formula is used in the book. So we will try all three formulas and we'll see which formula has been used. Let's say if we have used first formula and answer are matched, that means it's enough. Then we will use the second option and third option in case answers are wrong. Debt equity means external debt or liability, and it would be divided by internal debt or liability, one of the same thing. And here we will search what are external debts. External debts, amount payable to outsiders. So creditors, overdraft and acceptances, all three are basically outsiders. Liability, that means we have to pay to outsiders. So 25 and 15, 25,000 plus 15,000. So we have external debt. And now for internal debt, as you know that here balance sheet should always be equal, assets should be equal to liabilities, and here they are not equal. But we do know if capital is missing in any question, how would you calculate that capital? Total assets you will take and you will subtract total liabilities. In this way you can calculate your capital. Please note it down. Balance sheet has total asset. If you will subtract your total liabilities and still you have got some answer, that would be considered as your capital. And internal debt, we have understood in the lecture, internal debts are capital, reserves and surplus. So we can calculate capital. Let's go back and see how many total asset, 62,000. Put it over here and just subtract total liabilities, and here we have liabilities 40,000. Just put it down over here. So in this way we can put these amounts on calculator, where all assets we have taken and subtracted liabilities. Capital, amount of capital we have got over here 22,000. So in this way, please note it down. Internal debt. Internal debt means shareholder fund. Shareholder fund means capital. So capital we have calculated how? By subtracting total liabilities from asset, difference would be your capital. So here we have got the amount. Now it's time to calculate sum. And over here you can write sum over here. First we will see the sum of external debt, which is 25,000, and we do not need to calculate sum of internal debt. Now it's time to put it on calculator. 40,000 divided by 22,000. So we have got our third answer. Debt equity ratio. Look at here, this is debt equity and answer is 1.8 and we have got 1.8. In this way, third ratio has been completed. Now let's see what fourth requirement is. After debt equity, we have debtor collection period ratio. Debtor collection period. So here our fourth entry is debtor collection period. And how do we calculate debtor collection period, for which we need average account receivable. Average account receivable, here we need to settle it down and we need to now divide it with net credit sales. Net credit sales, and this is the way to calculate average collection period, and we need to multiply it with 360. So we can write it over here, multiply by 360. So this is our formula. We need to make a little more space over here. Alright guys, now please read it down. Average account receivable divided by net credit sales and multiply by 360. So here first we will see account receivable, and we do have debtors over here 30,000. These are debtors 30,000 and nothing else is given as account receivable. As you can see, stock, debtor, prepaid and cash, only debtors are given, no other account receivable are present. So 30,000 we have. How would we calculate average for first year? For calculation average you must have two opening and closing debtors, but year one does not have opening, it's only closing debtors mentioned over here. So you can write 30,000 only. So we have average debtors 30,000. And now we need to see where are net credit sales. Let's go back to the question and say, see, sales amounting to 350 for first year. No returns are mentioned, no cash sales are mentioned. It means we will indirectly understand it that these are net credit sales 350,000. Just put 350,000, and as a formula we need to multiply it with 360. Alright guys, now let's calculate it. And how would you calculate? 30,000 divided by 3,50,000, and then you need to multiply it with 360. So we have got 30.85. As you know, days cannot be in decimal, so you may write 31 days. So we have got our answer. Let's check it out. We were calculating debtor collection period. Here is your answer, and 31 days. 31 days we have calculated. Now please note it down. We have put 360. You may put 365. You may put 360. You may put 366. So one of the same thing, and here you can change it. Here you can see that it is 31.28. You may write 31 or you may write 31.28, but normally I have said you days cannot be in decimal. If you want to write 31.3, look, our answer is exactly 31.3 you may write, or you may write 31 days. In this way, our fourth statement has been completed. Now let's see what is next. It is proprietary ratio. The formula is in your mind. We will write heading first, proprietary ratio. And how would you calculate? Shareholder fund, and it would be divided by total assets. So here we are going to write total assets. And shareholder fund, you have already in your mind, it is capital plus reserve plus surplus. So we have got capital, reserve and surplus, and capital has already been calculated. Please note it down. Here we have calculated the capital, that is 22,000. So we will directly put shareholder fund. No reserve is present, no surplus is present. So it means 22,000 would be our shareholder fund. Let's put a bottom line, and then we will put total assets. So let's go back, and here you can see total assets are 62,000. We will write 62,000 over here. In this way our formula is complete. Let's put it on calculator. 22,000 divided by 62,000. So we have got 0.35. And what we have calculated is proprietary ratio. Look at here, proprietary ratio 0.35. And we have answer 0.35. In this way, guys, we have completed our half part of question where all answers are matched. First year is completed. Now you are needed to calculate all these ratios for second year. But for me, it is little easy. What I will do, these are the requirements, and I am going to copy these over here directly. I will not have to write them again and again. So let's get back. First ratio we need to calculate is current ratio, and we need to see how many current assets. Stock, debtor, prepaid, cash, all are current asset. 20, 30, 15. So here 20,000 plus 15,000, and there was another asset 20, 30 and 15. Okay, 20,000, 30,000 and 15,000. So we have current assets. Now we need to divide current liabilities, which are already mentioned in our question. Here are current liabilities. Look at here. All are current. Creditors, overdraft, acceptances 47,000. We will take a little, we will be speedy over here because we have already understood everything. So here let's put them on calculator. First, sum of current asset calculated. Now let's calculate the answer. Current asset divided by current liability is 1.38. So look at here, for second year 1.38 current ratio has been calculated. Next is quick ratio. For that we will subtract prepaid, and here prepaid is already missing. Then stock is 20,000. So let's come over here. We are taking same numbers, and I am telling you again, stock and prepaid are required to be subtracted. Stock is 20,000. So you are just needed to subtract 20,000 from here. In this way, liquid asset or quick assets has been calculated. Let's take their sum now. First we will see quick asset sum, and then quick liabilities are already calculated. Put them on your calculator. So we have got our second answer. This is quick ratio for second year. Quick ratio, and for second year it is 0.95. Look at here, 0.95 is written, and we have got our answer 0.95. It is mentioned by writing by ballpoint writing, and you can see over here 0.95 is your answer, and we have got our answer. Two ratios are completed. Now third ratio, again what we are going to do, just copying to save our time. We need to have external debt equity ratio. External debts already mentioned you. These are three external debts: 47,000, 35 and 12. 35 and 12. Internal debt, as you know, that we have to subtract total assets and total liabilities. Difference is capital. 65 minus 47,000. Okay, we'll solve it. Here we have calculated our capital, taking it over here. Total asset for second year 65 and 47. 65, 47,000. In this way we can calculate our capital like we have calculated in previous year. So for debt equity ratio, external debt is divided by internal debt. Internal debt 18,000 we have calculated. Now let's take their sum, and here we have got sum of external debt. Now we are open to put these upon calculator. So we have got 2.6 for debt equity ratio second year. Debt equity ratio for second year, look at here, 2.6, and we have calculated 2.6. Okay, one thing you can note that each answer does have one. So it's not the matter of worriness or botheration. You can ignore it because you may write this answer as 1. So that would not make any difference. It means 1.38 divided by 1 is equal to 1.38. So you may write or you may not write. It's just the same thing. So we have calculated third formula, and now the fourth is debtor collection period. Let's take it over here. For this we need to make a little more space. Alright guys, now we need to calculate average account receivable. To calculate any average, what you can do is to take opening plus closing and divided by 2. In this way you can calculate the average for second year. Here we have our account receivable debtors, 30,000 at opening, 30,000 at closing. This is second year. For second year, opening debtors are the debtors of previous year. So since it's the same amount, so you will get the same answer. That means 30,000 plus closing again 30,000 and divided by 2. This way same 30,000 would be the answer, and here we have got the 30,000. So average account receivable 30,000, and we need to divide it by net credit sales. So here we will calculate net credit sales, and it has already been given sale second year 3 lakh. So here you will write 3 lakh and we need to multiply it with 360. So what we can do it, we need to make little space. Let's add some columns and rows over here. Okay, so we have got our rows. We are shifting it over here. Here we need to multiply 365, 366 or 360. All can be used. So here again 365 would be mentioned. Now we are open to calculate our answer. Here 30,000 divided by 3 lakh and multiply by 365. 366 is also okay. So we have got our answer 36.5. It is debtor collection period for second year. Here debtor collection period for second year is 36.5 and we have 36.5. In this way our fourth requirement is also completed. We will now see our fifth requirement, which is proprietary ratio for second year. Next time do remember that I will solve only for first year. For remaining second or third year you will solve by yourself. So we have got proprietary ratio where we need shareholder fund and we have already calculated the capital. Look at here, that is 18,000. So same capital of 18,000 would be mentioned over here. Bottom line for calculation. Next, total assets. Just get back to the question. Here you can see second year assets 65,000. Just put 65,000 over here. Now it's time to calculate 18,000 divided by 65,000. What we have calculated is proprietary ratio for second year. Let's check it out. Proprietary ratio second year 0.28 and we have calculated 0.2769. So if we will round it up, it is 0.28. So guys, in this way we have calculated all requirements, 5 for first year, 5 for second year. Please see over here. Look, first requirement, second requirement, and then third requirement, fourth, this is your fifth requirement. In this way, first year was completed. Let's mark it and separate it. Then we have again first, second, third, fourth, and fifth requirement for second year. So in this way our question has been completed. It was having a length, but actually it's very simple question where ratios were required to be calculated, and even in the question what ratios we were needed to calculate, it was available. So we have calculated 5 ratios for first year and 5 ratios for second year. All answers are matched with the book. In this way our question has been completed. Though answers are in front of you, but even then if you have any difficulty, any problem, you are very open to share your problems and queries through messages, text, or directly meet and share your question. I am 100% sure to answer them quickly. So thank you very much for your time. It's time to say goodbye. Allah Hafiz.